how to pick a small cap company, more choice for financial services online, and the inside story of Intrinsyc software. All that and more today on Investors Online. Investors Online, your virtual read on the markets. Brought to you by E-Trade Canada. Someday we'll all invest this way. Now here's your host, Pat Bolland.
The small cap market's been taking a beating this past year. It's been off almost 20%, but is it bouncing back? Bob Tattersall manages the Saxon Small Cap Fund, one that's consistently beaten the averages, and he'll be here to tell us how it's done and take your questions. And there's a new company that's set to change the way online financial services are offered. We'll find out about that. And on our inside story, it's been almost a year since we brought you the story of Intrinsyc Software. And a lot has happened to the company. President and CEO Derek Spratt will be here with an update. And of course, he'll be taking your questions. All that's coming up.
After the break, we'll get the inside story of Intrinsyc Software from President and CEO Derek Spratt.
It was about a year ago that we first brought you the story of Intrinsyc Software. Based in Vancouver, the company is in the embedded software business and embedded internet as well. Embedded software is simply hidden in everyday things that we use, computer chips that are kind of in our microwaves, cars, and even our cash registers. Well, a lot has happened to the company in the past year. Intrinsyc Software is traded on the Vancouver Stock Exchange under the symbol ICS, and it closed yesterday at $1.40. One of the top gainers on the Vancouver Stock Exchange this past week. It had a 52-week high, though, of $3.69 and a low of 45 cents. And to catch us up on the latest developments, I'm joined once again by Derek Spratt. He's the president and CEO of Intrinsyc Software. He'll be taking your questions at 1-888-513-TVTV, and I'm sure there'll be lots in the chat room as well, because Intrinsic's known for being carried on the chat room. For people that aren't familiar with embedded software, it's everywhere, and maybe you might explain what we mean by everywhere, and more importantly, how big is this marketplace now?
Well, it's the market itself has actually gone from being a quiet little cozy group of embedded programming companies and hardware companies 20 years, 30 years, and now all of a sudden the desktop PC manufacturers, their industry is peaking. The embedded internet is really this revolution of these consumer appliances based on internet connectivity, and that's really a shift from the desktop to the embedded space that we're now tracking.
This is basically, you know, your toaster that could be attached to the internet within your own house kind of a thing, and you could control things remotely from your office to say, toast my wife's toast early for, you know.
Sure,
that's
or anything to do with, like, say, your home security system when you're at the office. You use your desktop PC to check on what's going on. But think of an automotive manufacturer who might diagnose your car as you're driving down the street without you even having to be involved, and they can let you know by email or a voice prompt on your car. That
any sense in a dollar value what this is worth?
Well, somewhere around $3 billion this year, 50% per year growth compounded. So you're looking at $7-8 billion by the time we push through the millennium.
Wow. Okay. Now, the last time you were here, we were talking about your relationship with Microsoft. I'll get to that, but more importantly, you've had an ongoing thing with Anasoft, and the relationship between that didn't come to fruition. You didn't merge with Anasoft.
Right.
And want to tell me that story?
Sure. Absolutely. That's important for everybody to understand that. We wanted to leverage the opportunity that their branding and their U.S. distribution channels gave us, so we looked at acquiring them. We announced the definitive agreement in August. It was subject to a financing, and we hit the general market conditions that everybody is aware of in August, the big crash of 1998, and couldn't complete. Now
you couldn't raise the financing, bottom line.
Yeah, it was a responsibility for Anasoft actually to raise funds on their end as well, and we basically both ran into the wall. And
do you still have a working relationship with them?
Oh yeah, absolutely. They're a key distributor for us, and we were just at shows together in the last 2 weeks. But what's happened is, it turns out that the market is now ripe for our technology. In the last 2 months, the market's really exploded, and the strategic partnering is probably the most powerful thing we can do. Now, this time in January, we didn't have those options. The market wasn't where it is today, so it may have worked out that the lack of dilution of the acquisition may work in our favor in the end. So we're pretty positive that
By the
things
same
are working
token,
out.
it could still go forward if this all changes
Sure.
in another 2 or 3 months' time.
Sure.
Okay, you've just come from the Embedded West show, haven't you? And I think IBM and Intel were there. Are these companies that are changing their focus in terms of their relationship to embedded software?
Well, IBM's website this week shifted over to an embedded story on their front page, which is very interesting. And I noticed you guys had Cisco on.
Yes, we did
recently.
last week.
Yeah, and all of these companies are now saying with the PC industry, the statistics are that it will peak this next year. They're all saying, well, the future is this new enriched consumer and commercial electronic product
So the
market.
trend is that because they peaked out in PCs, they're looking for other areas.
Oh,
That's the
absolutely.
real
And
trend.
some of them are going to be successful and some of them are not, and it's going to be very interesting to see how this
Now, are
plays
you
out.
ahead of them then? That's the question.
Oh, you're talking to someone who obviously believes that very strongly. The fact is, people look at Microsoft as being the one company that we have to deal with more than anything else. We're ahead of everybody by approximately a year with what we're doing. Various people have stated that they're getting into the industry. Some of those people are obviously having conversations with us, and perhaps our future destiny is to be the hidden force that allows these larger companies to deliver on the promise. They get caught off guard, they have to react, and we're there with the right things at the right time.
You mentioned Microsoft as a competitor, but I mean, it was only a year ago at this time. You were in the Comdex booth with Microsoft.
Yeah.
Has that focus changed? What's the nature of your relationship with Microsoft right now?
It's a multi-dimensional relationship. It's very positive. We are partners of theirs. We go to a lot of industry events together. Think of us as providing the missing pieces for their strategy. They're a large desktop-oriented software company that's moving into this space. We're really coming up from the embedded space and pulling them down into it, and we're solving a lot of the mean, nasty technical problems that they need, their customers need. So they give us their leads whenever they're running into a design that they need to get into an industry that they can't serve themselves. So we don't see it as competitive today. It's just a reality that Microsoft will continue to expand its sphere of influence, and we will continue to stay ahead and start focusing on different verticals.
Is there still the same opportunity they'll just buy out?
Well, I think people are motivated by fear or greed, and Microsoft is obviously motivated by the greed factor in terms of it wants to expand its business model. A lot of people are threatened by Microsoft in the embedded space, and we've had a lot of conversations with different companies, including Microsoft, and there's a lot of opportunities when people look at exit strategies for Intrinsyc. It's more popular nowadays to do M&A transactions than IPOs. And for Intrinsyc, I think for us, it's certainly a first stage investment. Those types of discussions are certainly on the table.
Let's talk about your new products. I think I saw a list of 7 new products that you've got out fairly recently.
Yeah, well, we've been sort of toiling away in the back rooms for a year, and now we've come out, and between last year and now, there's been a huge improvement in not just the market conditions, but the fact that we have shippable product. And I have my little stage prop that I brought for you this year. And last year I showed you something that someone else made.
The world's smallest computer last year.
Yeah, well, this is even smaller, and Intrinsic's not a hardware company, but we developed this in conjunction with Hitachi to show people what you can do with Windows. And this is a full Windows product that has a web server, and actually if you connect to this thing at Comdex, it plays the Pulp Fiction soundtrack to show people that it's a multimedia device as well.
What do you do with something like this?
Well, that could be that could be the thing that's in your toaster. That's about $30 worth of product sitting there, and that could be anywhere. This is a product that we're not shipping. This is a product. We're just allowing people to have this out-of-the-box happy experience when they buy our software. They can plug this thing in and they can see what we're doing instantly. But it gets them as a reference design to produce their own products quickly. We're trying to get people to market with our stuff.
Okay, we've got to take a commercial break, but we're going to come right back with Derek.
Great.
If you have a question for Derek Spratt of Intrinsyc Software, call us now at 1-888-513-TVTV. The Investors Online Discussion Forum is provided by Simpatico.
And welcome back to Investors Online. I'm Pat Ball, and Derek Spratt is the Chief Executive Officer of Intrinsyc Software, and he'll be taking your questions at 1-888-513-TVTV, or if you're in the chat room or in the forum at IOLTV.com, send us a question. As a matter of fact, Derek, through the course of the week, we did get a question from the forum that I'll get to right away from Codfish with regard, because it fits into what we were just talking about, with regards to the announcement from Embedded Systems Conference a couple of weeks ago. How tight is the relationship between Hitachi and Intrinsyc, and is Intrinsyc developing relationships with other major companies like Hitachi?
Well, with Hitachi, we're very much exploring new territory for them. They, as a company, experienced their first loss in their corporate history with the Asian flu, and their CEO has stated that they want to become more software and services oriented and branch out past semiconductors and fabricating chips. And they're testing new waters with us, and the relationship went really well for the last couple of weeks. It certainly attracted the attention of Motorola and Intel and the other people that produce competitive chips. And having this little surfboard sitting here, certainly there's all kinds of people that want us to do similar products with them. I don't expect Hitachi themselves to come out and make an equity investment or do something like that. I think that we'll start doing sort of a lot more co-marketing together. And this is an example of what we will be doing with a number of these guys.
Do you perceive that there's a risk by affiliating too closely with one company in particular, whether it's Hitachi or Motorola?
Absolutely.
You want to be a free agent player then? Yeah,
you got to give things up sometimes to get things back, and we're currently evaluating other offers on the table for investment that are going to perhaps focus us a little bit. I don't think it's a competitive thing as much as it's limited resources, small company. What do? You typically want to sort of pick your best partnership, maybe two. There's companies in the past that have tried to do a dozen or more in Silicon Valley, and they've failed. I think you get pulled in too many different directions. So we're picking our dance partners.
Good for you. Steve in Vancouver, go ahead.
Hi, Derek.
Hi, Steve.
Considering your inability to raise financing in the last couple of months, I'd just like to ask you what your financial health is now and how it will be going forward, and if you're going to have to go to the market with any more financings.
Okay, that's a good question. We have a number of months of burn rate left with our corporate treasury balance.
How much cash you got right now?
Cash and receivables is about 500, that kind of range. We're burning a little under 150 a month right now. The bottom line for us, though, is we're watching real carefully. I don't like being in the position I'm in. I'd like to have a more aggressive strategy. Having more money and more financial resources allows you to be more aggressive. But we got things cooking. There are revenues coming in. I talked to you a few seconds ago offline about having a lot of downloads. Yeah. We've got a lot of people that have come forth and said, let's start working together. It's difficult for me to determine exactly how fast that money will come in, but in the last number of months, we had $500,000 worth of revenues come in.
Your worst case scenario, though, is could be that you're back in the marketplace in the next 3 months, is my sense of it.
Yeah, we can do a combination of things. We can actually do debt financing to the bank against projects that are coming in. We could go out and do a small round of equity right now. My preference is to focus on the strategic alliance, strategic investment thing, and to make those relationships work. They may take a few more months to put together, so we might do something in the meantime, but we're not looking like a significant round.
I should take it the next step too, because this came right out of with all the internet mania sucking up. This came from Rod as well. Sucking up investment capital. Does Intrinsyc see any difficulty securing financing to fund future growth?
Well, it's funny, some people have done their homework and they followed us to the trade shows and they've done some analysis work, and we're a lot hotter than I think the general public, the stock market understands. We're getting a huge amount of pull in the industry, and the people that are in the know are now coming to us and saying, would you like to do $1 million, $2 million round of financing at these levels? And we're very cautious because we've always done financings at progressively higher levels, and we had this correction in the general market that hit all the microcaps, including us, and then we had the Anasoft deal in the middle of it. So we really had an oversell situation, and we're waiting for that to kind of settle out before we make our moves. We're not in a huge panic.
Okay, back to the phones for Art in Trail, BC. Go ahead, Art.
Hi, I heard some of Steve's question, but I didn't hear all of the answers, so this might be redundant. I'd like to know what your debt load is right now.
Oh, well, that's a good question. You see, we don't have any debt, and maybe that was one of the things that spooked people about Anasoft, is that we did announce in the news release that they had a $1 million US working capital deficit last year, and that was one of the reasons why we needed to do a financing, is that we take a debt-free company with a clean balance sheet, you acquire a company that's got a certain amount of, they didn't have the markets, they're a private company, so they created a debt load, and we wanted to make sure that we didn't carry any debt moving forward. That was what our board, that's what I wanted to do, so I think that that answers it.
Okay. Last year when you were here, your stock was $2.25. Your stock's now $1.40. I mean, you touched on it briefly just a few seconds ago. What happened to the stock price per se?
A couple of things. First of all, it's difficult for anybody to put a real value on a company that's pre-revenues. It sort of hasn't yet had the validation from the market. So we're on a venture capital exchange. Volatility is sort of the nature of the beast there. I think that really for us internally, our benchmarks, we're hitting them all. We've got the technology at the right place at the right time. We've got great people. A business like ours is fueled by, creative talent, and we've got it in abundance, but we haven't proven to people that it's delivering. And so I respect the fact that people are cautious, specifically in the markets that we've experienced this summer. And I just have to say that we're, as a management team and the developers, we're very, very confident in what we're doing. And that I think that we just are going to prove the old-fashioned way. Here's revenues, here's strategic partners, and that's what we're up to for the next number of months.
Now, you also indicated last year that you're going to get listed on the Toronto Stock Exchange, or you were hoping to go that way with an issue of new shares, and you're still listed in Vancouver. Does that kind of hurt you, do you think?
Well, two sides of that. At the stage that the company's at now, it's starting to impact our ability to bring in the U.S. investors, but we've raised $8 million on that exchange, and that's helped us do what we've done up to now, so it's been good for us. I really think that what we need to do as a company is, in the short term, we're filing the paperwork for the NASDAQ OTC. It's something quick that we can do. It's more of a U.S. investor perception thing. It's part of the reason why we wanted to do the Anasoft deal, was to become sort of a U.S.-based company and have that visibility to the company. But most importantly, I think for Canada, this brings a non-intrinsic issue into the table, which is we need sort of a new electronic exchange, a new venture capital exchange that erases some of the baggage.
Got a political agenda, do you?
No, but I think think about the economy and what we're trying to do with this country, and we're losing billions of dollars worth of growth in our economy to the U.S. because we can't finance little companies like Intrinsyc properly.
One last question. No, we don't have time for that. Richard in Comics, has he gone? He's gone away. Okay, good. I'll ask you one last question, though, about how successful Microsoft is in gaining market share in the embedded market. Just as the last one, because I think this is probably where your competition is going to come from. The big guys moving into embedded.
The big guys, yeah. And see, with Microsoft, you've got to understand that they come from a desktop mentality, and so it takes them a little while to get the recipe right, and that's an opportunity for the small players. But I think that they're doing incredibly well. They've had a huge number of announcements with major partnerships. The fact is, a lot of these CE products in the embedded space haven't shipped yet. A lot of people are just getting them going. So they have a very small percentage of the actual market, but I think their rate of growth is going to be substantial.
And hopefully it is for you, too.
Absolutely.
Thanks a lot, Derek, for coming in once again.
Thank you.
For more information, check out the company website at intrinsyc.com.